apps. Well, let's get a move on and focus in on numbers. Talk about CAMS in greater detail. They delivered revenues which were at about 171 crores, flat with margins growing to 43%. Anuj Kumar is the CEO of CAMS and now joins in on the show. Good to have you on board. Now, revenues have largely remained flat with a bit of a downward bias on a year-on-year basis, but sequentially have managed to grow. This is very closely tied up with the MF AUMs. So how are you analyzing the fund flows in the mutual fund industry? What would be your outlook over here?
No, sure. So I will start by giving you a summary of what 2Q and 1H has shaped up like for us. And in the process, I guess you will get your answers. So one, despite all the volatility in the markets and the pandemic situation which has prevailed over the last 8 to 9 months, we believe that the company results are very satisfactory. Mutual fund industry AUM, with the exception of equity assets are still trailing, but aggregate assets have come back to pre-pandemic levels, which is a heartening fact. Also, the industry continues to attract new investors through this phase. We've been onboarding new investors, which is also a good development. Assets serviced by CAMS, and you know, asset share is a key metric in the industry. Assets serviced by CAMS are now at 70% of mutual fund industry.
What is the share of breakup in revenue and profitability category-wise, MF AUM? With the exception of equity assets, has it come back to the pre-pandemic level?
Yeah, so I must tell you that equity is still a little behind the curve. Overall, to answer your first question, equity does contribute, has the highest contribution to the overall revenue mix. It is also the most intense part of the industry. It comes in small packets. The servicing needs of the investors are diverse. The service needs of the distributors are also fairly sustained. We do things like a large amount of dividend processing, brokerage, those kind of things. And because this comes in small packets of investment, especially through the SIPs, the work intensity is quite high. Equity is followed by debt, which is followed by liquid, and then followed by categories like FMP and ETF. So that's really the revenue yield pyramid of the entire industry. In terms of equity, the sales process has been slow. That's part number one. Part number two, while the SIP flows have been sustained, although they've also contracted slightly over last year, the lump sum monies that used to come into the industry have been pretty slow. And that's largely the HNI, the most seasoned investors who participate through lump sums. I think we've got to let this play out for a little more time. We've got to let this play out for the next 4 or 5 months. And our belief is that just like in debt, where there's been a significant uptick in investor participation, some corporate, some individual, the status of equity assets and equity selling should come back. But right now, what we see is it hasn't come back.
Now, there has been a focus, growing focus rather, on digital platforms and digital adoption. And, there has been a shift towards direct equities. What are some of the new emerging trends that you're observing?
So for a period of time, and you could say that is essentially 2020, yes, there has been expansion in people trying to participate directly into the equity markets. You would have also seen that, and that's a standard communication which gets to you from mutual funds, from fund managers, from PMS companies across the board, that you need some degree of advice and you need some degree of guidance to get into the markets. Our estimate is that because markets have been unidirectional, let's say April onwards, which means they contracted and then they've been gaining steadily for 8 months. Some of the returns made by people participating directly would have been exaggerated, which has given rise to some euphoria. But if you take the last 15 or 20-year trend, I think it has been largely established that an intermediated going through a fund manager or going through a mutual fund is probably the safest, most balanced way to participate in the markets. So that trend, I don't think is going to get reversed based on what happened in 8 or 9 months. We are seeing a phase. And our belief is that that phase, we will emerge out of the phase. And people's belief that coming in every month with a certain amount of money and letting a professional fund manager handle it in a very tax efficient, well-researched format is the way for individuals to go. SIPs, as you know, have grown tremendously in the 15, 16, 17, 18 kind of time frame. And over a stratospheric growth, you will always see consolidation in any key metric in an industry. We believe this is a consolidation phase. But investors' belief in mutual funds and for them to participate through the mutual fund route will be sustained.
All right, we'll let you go on that note. Appreciate you taking the time out and giving us that perspective. Let's slip into a quick break then right here on the show. Be right back as we get you some technical trading calls as well as corporate views when we return.